So today, Alibaba, ticker symbol BABA or BABA, reported their Q3 earnings ending in June. And Jack Ma, who's the CEO of Alibaba, showed us once again why this is such a dominant company. So let's get into the numbers and see how they did and what we can expect from this company moving forward. Hey guys, welcome back to another video. Hit that subscribe button down below if you're new to the channel. And if you're a long-time viewer of this channel, you know that I've been making tons of videos on Alibaba. You know this has been an investment of mine for a long time now. So drop a huge like to show your support for the stock, show your support for the channel, and if you're an investor in Alibaba as well. So let's get started with some numbers that they reported from their earnings. So here we can see that their revenue came in at 80.92 billion yuan, which is the Chinese currency that they report in, and this is approximately 12.23 billion US dollars. And this comes in versus an estimate of 80.75 billion yuan. Now net income came in at 8.69 billion yuan, and EPS was 3.31 versus 2.791, so that was a beat as well. So these numbers were all strong across the board, and it should really reaffirm and show investors that even with the trade war concerns or a slowing Chinese economy, companies like Alibaba are still thriving. So now let's take a look at some growth numbers that they reported just to see how dominant this quarter was for them. So here we can see first off that revenue has grown 61% year over year. And this is mind-blowing considering 2017 was a record year for them, and now they're beating those numbers that they reported back in 2017 significantly. Next we can see cloud growth, which is a huge sector that I'm watching closely, and they had 93% year-over-year growth here, which is almost double of what they did last year. So what I would do is keep a close eye on this moving forward, because this could be a huge cash cow for the company in a few years. Mobile users came in at around 634 million, and annual active consumers came in at just over 500 million users. Now finally, if we look at their free cash flow, that came in at around 4 billion US dollars, which is absolutely phenomenal considering that the stock is not even focused on making profits yet. So looking even closer here at their revenue breakdown, we can see that majority is still coming from the retail portion of their business. But bringing your attention to the bottom here, they go over the cloud growth in the cloud section, and we can see that this only accounts for 6% of their business currently. But the important aspect to look at is that it's growing 100% year over year. Of course, this is going to slow down over the next few years as they get bigger and bigger. The law of large numbers will catch up. But I wouldn't be surprised to see the cloud aspect of their business bring in around 50 to 20% of their overall revenue and profits, because that's kind of the trajectory that they're going at, and that's where they're putting a lot of focus into right now. And as we know, of course, cloud is a very, very profitable business. So if Alibaba can really focus on growing this to something like 15 to 20% of their overall income, that'll be very beneficial for the company because they can use those profits to grow other sectors in the business. So now here I have a chart of another look at their revenue breakdown as a more visual, so you can see all the different segments and companies that they own. So looking at this, we can see that every segment really grew double digits in the last quarter. And the laggard really here was the digital media section. So digital media includes things like their Youku platform, which is their streaming service platform, their video streaming service, and also other offerings that they have like some TV service platform and TV streaming. Those also did not grow as much as the overall business. That being said though, we still had a 46% growth year over year in this sector, even though it was the slowest growing segment in their business. So there you guys have it. That was just a quick update on the earnings for Alibaba. Alibaba is still a solid stock, still a phenomenal company led by a phenomenal CEO. There's a lot of good things going for this company, and the recent trade war tensions and the slowdown in Chinese economy and all these other fears that are out there could be potentially giving you a perfect opportunity to enter the stock at a huge discount. Now once again, I released a video yesterday on Tencent and a Tencent deep dive analysis. So I did say that if that video got 100 likes, I would make a deep dive on Alibaba. So make sure to check out that video. But don't forget to drop a huge like on this video as well if you like these quick recaps on earnings from large companies that you guys like following and companies that I own personally. Either way guys, thank you so much for watching. Hope you enjoyed this video. Don't forget to subscribe and don't forget to invest positively.